So as you can see, this is a practical example on the control account. So let's solve this example. Hamster Ventures books showing sales and purchase ledger control accounts with the following information on how the account will be in the general ledger. So these are the information that we use to prepare our sales ledger and purchase ledger control account. Now, debit balance in the sales ledger. This is very clear. Our debit balance in the sales ledger. You go to your sales ledger at the debit balance. At the debit balance, you see, balance brought forward. Currency sign, your currency sign. Balance, this sales ledger control account, debit side and credit side. So the debit balance in the sales ledger control account, this is the opening balance. So it is 10,000. It's $10,000. Number 2, debit balance in the purchase ledger. You go to your purchase ledger at the debit balance. Say balance brought forward of $300. Simple as that. You just be putting the transactions. We've mastered our format, so now we'll just be doing it as if we are playing. Number 3, credit balance in the sales ledger. You go to your sales ledger on the credit balance and it is 200. Balance brought forward of number 3, $200. That is all. Simple, very simple. Now, number 4, credit balance in the purchase ledger. You go to your purchase ledger. So balance brought forward of, as you can see, credit balance in the purchase ledger, $10,000. $10,000. Very simple. Now, the number 5th question, credit purchase. So we purchased more on credit. It will add to our purchase ledger control account since we are purchasing more on credit. So you go to your credit side of the purchase ledger and increase your balance. You say credit purchase. Credit purchase of 15,300. 15,300. It's very simple. So number 6, credit sales. We also sell to our customer on credit. So the money or amount that the customer will pay us will increase. It will add to our sales ledger control account because they are not settling the balance that they should pay us, but they are taking or collecting another items or goods on credit. So it will add to their balance that we are to receive from them. That is credit sales, and it is 17,000. So whatever comes here will increase the balance that the debtors will pay us, or to receive from the debtors. And whatever comes here will reduce the balance, that is, they are settling or clearing off this balance we are receiving from them. We did that in our last lecture or last video. So credit sales. Credit number 6, credit sales of 17,000. You come here and say credit sales. And the credit sales is $17,000. It's very simple. Number 7, sales return. They return our sales. So this is what? Return inward. Sales return is return inward, and it will affect our debit side of the sales ledger. They have returned some part of the goods. So it will reduce this balance. Say return inwards. It's very simple, and the return, sales return is 141. It's not, control account is one of the most simplest topic in accounting. Purchase return, this is return outward. We are returning it back to our creditors. It will reduce what we are to pay the creditors. So it will come here and reduce this amount, this credit balance. So return outwards. And the return outward, purchase return, is $200. Simple as that. So number 8, transaction 8. Number 8 is purchase return. Number 9, cash received from customer. We have received, so it will less this amount. We receive cash from customer. Say cash received. So cash received from customer, we receive $7,000. So it will less this amount that we have to receive from them. So they are paying us. They are reducing, settling this amount. So number 10, check receipt is the same treatment. You receive check received, and the check we receive from our customer, receivable, the same thing with the customer, is $15,000. Simple. Number 11, discount received. We received a discount. Now, this will go to our purchase ledger. When we pay our creditors, they give us a discount, and the discount will less what we should pay to our creditors. So it will come here. You see discount. It's very simple. Discount received. Discount received is how much? $120. So number 12, payment to trade credit. We pay them. We pay. So it will reduce this balance. Payment. And the payment, number 12, is how much? $13,000. Very simple. Number 13, payment overcast. We pay a higher amount. So if the error is identified, it will less the balance that we should pay them. So payment, let me say overcast. Payment overcast. And the payment overcast, number 13, is $270. Very simple. So number 14, discount allowed. We allowed our customer a discount. So it will reduce the balance that the customers are to pay us. So you come here and say discount allowed. And the discount allowed is number 14, $60. As you see, it's very simple. So number 15, bad debt written off. It will reduce what the customer should pay us. We have already zeroed our mind that we cannot recover this debt. So it will affect our balance that we ought to receive. So bad debt written off. And the bad debt written off is $50. Very simple as that. I'm just playing with it. I'm just playing with the entries, as you can see. So number 16, provision for bad debt. Provision, if you go back to my previous videos, you don't record transactions that has to do with estimation. That is provision. You're providing for bad debt. You should not go to our control account. It is only bad debt. And number 17, bill accepted from customer. We accept bill of exchange from our customers, so it will reduce this balance. you come here and say bills received or accepted. And the bills we received, bill accepted from customer, is $4,300. So number 18, bill to creditor. It will be reducing our credit balance with the creditors. So bill payable, and the bills payable to the creditor is $6,100. $6,100. Then number 19, sales ledger credit balance to purchase ledger. So our sales ledger, this is a transfer. We are transferring our sales ledger credit balance to purchase ledger. So this credit balance, we are taking out from this credit balance to our purchase ledger. So if you put it here, if you put the transaction here, enter it here, it will increase your credit balance. They were taken from this credit balance, so it must show here that what we have already deducted from this balance, we are taking it out, so it will come back here to increase, to add to the balance. Say sales ledger, you can see sales ledger credit balance to purchase ledger. So and it is sales ledger credit to purchase ledger is $80. So you go to your credit side. Since the entries is here, it must go to the credit side to increase the credit balance. You say credit balance from sales ledger, and it is $80. So this is the treatment. Go back to my previous videos. I've explained a lot on the format of sales and purchase ledger, and we're just playing with the entries now. So number 20, cash purchase. Anything you pay cash purchase is not going to be in our control ledger. Cash refund to debtors. We refund a cash to our debtor, it will increase the balance of our sales ledger, debit balance of our sales ledger, because they have already paid us. Maybe the cash we receive was not meant for this transaction, so we have to refund it back. So it will add to the balance because we have already minus the balance before. So we are refunding the cash to them. So we will come and add it back by saying cash refund. And the cash refund to customer, debtors is same thing, is $4,716. $4,716. Simple. Then bad debt recovered. You recover the debt, so it will add to this balance because we've already written the debt off, the bad debt off, but now we have recovered it to add to this balance at our debit side. You say bad debt recovered, and the bad debt we recovered is $10. Very simple. So now we go to the next item. Received under cast. We received under cast. So we're going to add it. We have received and it was an error. Instead of us to receive 50, we receive 20. So the remaining 30, if identified, we'll come and add it to complete the amount that we're supposed to receive. So you add it here. Received under cast, and the received under cast, is $500. Simple as that. Then let's go to the next item, received over cast. You receive over cast, so it will less this amount. You say received, it will come here as received overcast, received overcast of $400. Sales ledger, the 25th item, sales ledger debit balance to purchase ledger. This is a transfer. Your sales ledger debit balance, so you will show the transaction will come here. You enter it here, because if you put it here, you're adding it back, and the equation says you are taking it, so it must come here. That is debit balance of this ledger to purchase ledger, and it is $500. So you go to your purchase ledger. Since this account is at the credit side, it will go to the debit side and say debit balance from sales ledger, and it is how much? $500. Simple as that. So the next transaction is interest charged to debtors. So this interest charge we add to the sales ledger control account. You charge them an interest, maybe for not paying for the item that they've ordered. The time has overdue, and you are charging them an interest. So it will increase the debit side of the sales ledger control account. Say interest charged, and the interest charged is $100. So nothing charges. We place a notice to our suppliers to keep a certain item of goods for us, and the time have expired for allowances, then they will be charging all that notice, that item that they reserved for us, and it will increase our credit balance of the purchase ledger. Nothing charges, and the nothing charges is $300. Payment under cast. This payment under cast will add to the credit side of the purchase ledger. Say payment under cast, and the payment under cast is $500. Say $500. Simple as that. So the next transaction is bill payable dishonored. Bill payable dishonored. It will add to our credit side of the purchase ledger. You say bill payment dishonored, and the bill payment dishonored is $230. So the third item, transaction 30, is bill received dishonored. So it will add to our sales ledger. Say bill dishonored, and it is how much? Bill received dishonored is $150. 31. Credit balance in the sales ledger. This is the closing balance that I've explained in our format of this account. Whenever you see a credit balance in the sales ledger, you will go to your sales ledger and give a line space. At the credit side of the ledger, sales ledger. Give a line space like this. After giving a line space, you have cast your account. Then, whenever you see a credit balance, it means the balance BD at the credit side. Then you go down and put your balance BD brought down of credit balance in the sales ledger, $95. So definitely under must in accounting, whenever you see a balance BD at the credit side, there must be a balance carried down at the debit side, because it is the balance that we brought it down at the credit side. In accounting, it is a must. So you must come here and say balance carried down of this amount, that is $95, and rule. Simple as that. Say, then you are done with this question. Credit balance in the sales ledger, $95. This is the credit balance, and it must have a carry down at the debit side. That is what I'm saying. The 32nd transaction, debit balance in the purchase ledger. So you go to your purchase ledger at the debit balance. What makes it to be debit balance is the balance BD. Say balance BD of the amount is $80. So since here is the balance BD, there must be a balance CD in accounting. There must be a balance CD at the credit side. Then it will be brought down at the debit side. So you say your balance CD of $80. Then you go to the next transaction, debit balance in the sales ledger. Debit balance in the sales ledger, $5,000. You go to your sales ledger control account. This is the debit side of the account. It's a debit balance, balance BD of debit balance $5,000. Then it is a must that the credit side will carry the balance carry down. So balance CD of $5,000. That is all about the balancing. Then let's go to the next item of the question. Credit balance in the purchase ledger, $6,000. You go to your purchase ledger control account, a credit balance of $6,000. That is the balance BD, balance brought down of $6,000. Then it must be at the credit side as balance carried down. Then it is the balance carried down that will be brought down. So here at the credit side, we will have balance CD of $6,000. Simple as that. So now, this our account, the sales ledger control account and the purchase ledger control account. There is nothing like looking for the difference to balance. Now, we're just going to add it all. Whatever you get at the debit side, you put it direct. At the credit side, you put it direct. But they must be the same amount. If you add it at the debit side, you may get the same amount. At the credit side, you must still get the same figure. At the sales ledger control account, if you add the debit side, it will give you the same amount with the credit side. So that is all about balancing the control account. So if you add your debit side of the sales ledger, $10,000 plus $17,000 plus $80 plus $4,716 plus 10 plus 500 plus 100 plus 150 plus 95, you will get 32,651. And if you add this type, it must give you $32,651. So if you add this side, the purchase ledger control account, 300, 200, 120, 13,000, 270, 6,001, 500, and it will give you 26,490. And this side supposed to and this side must give you the same figure. That's 26,490. That is all about control account. The sales ledger control account and the purchase ledger control account. So please, if you're happy with what we're doing, subscribe to our YouTube channel and don't forget to hit the notification bell icon and click on all so that whenever we release our video, it will come to you. Thank you so much.